put it back together so that it makes sense for you. I'm Forbes Markets Editor John Dobis. Well, bigger than most Apple product releases, the iDividend. Apple has declared a dividend of $2.65 per share, which will begin paying in the third quarter of 2012. They don't call it that, they call it the last quarter of the fiscal 2012. But they'll be paying out $2.65 per year. The stock will yield about 1.8%. It's a huge amount of money going out into the economy as income, believe it or not. One thing Apple has decided not to do is to do a stock split. Like that art right there. Company saying stock price is just fine. They're going to do a buyback though, $10 billion over the next 3 years. They'll be buying back about 1.5% or so of the float, not a huge one, but at least putting together some plan to spend all of that money, some $98 billion on the books at Apple. They could buy 98 $1 billion companies. Think about that. What does Apple have to do from here? You know, this yielding a dividend now makes people think, well, there's not so much good stuff to spend your money on. You're going to give it back to us. Well, Apple, of course, needs to keep the hits rolling. They've had the original iPod, the iPhone, the MacBook Air, the new iPad. But Steve Jobs is not there anymore. It's Tim Cook at the helm. A lot of the products, in fact, all the products out right now, of course, were inspired by Steve Jobs. We'll really see in the years ahead if Tim Cook can maintain that kind of vision that Steve Jobs had for what product would really sell well. Apple shares really trotting higher since Thanksgiving by 67%, 66, 67%. Imagine that. It's 2/3 more valuable than it was then. You want to really kind of look carefully at Apple shares. They still have a very low multiple, but when they're giving back that, making a crazy run, you want to be a little skeptical, and everybody seems to love Apple. Apple has the Frank Lopez problem. You know what that problem is. He told his friend Tony Montana and Scarface, of course, your biggest problem isn't bringing the stuff in, it's what to do with all the bleeping cash. And Apple is having a little bit of a discussion about what to do with all the bleeping cash because they still have plenty of it left over, even after spending some $45 billion on all this. Tech dividends are nothing new. They really came into their own about 9 years ago when the dividend law changed, reducing the taxes on it. Intel's been paying it out since 1992, in fact. Microsoft been paying it out since '03. Here's Intel since '03, cranking out that dividend. It's gone up. It started at 2 cents every quarter, and then the next year it was 4, 6, 8. They've been jacking it up. It started out 8% annualized in '03, and it's at 84 cents, 10 times as much from the stock per share today as it did in 2003, and it's still yielding 3%. Intel, the shares in the past 3 years here, nothing but higher, looking very good. I have it a little bit in my portfolio and I'm very happy. Mr. Softy, Microsoft, they're paying out a dividend, they're yielding 2.5%. Started out 32 cents per year in '03, they're up to 80 cents, not even a tripling. So, you know, not as much as Intel, of course. Microsoft stock, though, doing very well at a new high for the year. There's some companies out there in tech land that are rather puny dividend payers. Larry Ellison over at Oracle and John Chambers at Cisco fit in that camp. Look at Cisco, they're yielding 1.6%, which is decent, and they did just recently jack it up from 24 cents per year to 36 cents, so a nice little 33% move higher in that dividend, and the stock is at a new high for the year as well, looking decent there. Oracle's only paying out 0.8%. Maybe Larry Ellison's spending too much on sailboats. No, I'm sure it's being well spent. Oracle also for 2012 has had a nice little run, down from late last year when it looked like tech spending in the business sector would be under pressure. Oracle stock, though, 0.8%. At least they're paying something. If you want to look for some decent yields, look for semiconductors, specialized semiconductors. Maxim Integrated Technology, 3.1% yield. Very similar company, Xilinx, but a smaller yield, 2.4%, but they at least do grow it. XLNX is the ticker symbol there. So remain to see if Apple remains the growth juggernaut it has been for the past decade because there is somebody new in charge.